Hello and thanks for checking out TheChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, going to start off both the US and Canadian MJ videos this weekend with a little bit of an intro video. This is still midday on Friday, and just filming this as a sparked conversation from someone with Twitter, a bit frustrated with the sector who's not at this point, but he asked some good questions, raised some good points, had a good conversation, and I want to relay that information as far as the trading environment that we're currently in. Obviously, it's a very different psychological market, and I want to compare right now how, in my opinion, this fear market is the exact opposite of the euphoric market that we were looking at both technically and psychologically from the euphoric market at all-time highs on the way up to legalization. So this particular frustration for this individual is derived from this 5-minute equilibrium. So today we are looking for an oversold bounce. We get the gap down open. The bulls buy the gap down open. Clear 5-minute equilibrium, bull break, uptick in volume. It's not a huge uptick in volume, but it is slightly increasing. And then it's straight into a bear break and a new low of the day. So as we know, when we see a break of support on a shorter term time frame with no follow through, we zoom out and look for a bull flag. When we see a break of support or a break of resistance with no follow through on a shorter term time frame, we zoom out and we look for a bear flag. So in this instance, that bull break, if we look at that on the 15-minute time frame, with yesterday's trading action, the gap down open makes it a little bit odd, but if we were just looking at yesterday's action and then this bounce, it looks a bit like a bear flag to me. Perhaps the half hour is a bit better, but again, just comparing it to yesterday's action, the bounce today, a weak bounce and a drop to lower lows, weak comparative to the previous day. So the individual's questions were, why are these bull breaks getting no follow through? Why are shorts not covering? Why are shorts not taking profit? And for me personally, shorts are getting greedy down here. Absolutely. And they also, the individual made a statement, bears can just throw a dart at the sector and be making money right now, which is exactly what it was on the way up. You could choose any marijuana stock. It would go up with the rest of them. The same was true in the cryptocurrency space. That's why all these scam coins that don't do anything ran significant percentages to the upside because of the environment, the market environment that we were in, euphoria versus fear. So now we are in fear, and the bears are greedy. Don't get me wrong. We are absolutely seeing bears greedy that are either entering positions down here or just holding on to positions. Maybe they're up 40% and have no interest in covering because the bearish news and the seeing their gains every day just leads to them not having an interest in covering that position. So just an example, if we're going to be looking at the bounce this morning, and I'm going to put a line here on the top of this bounce, and then we look back at the last however many weeks of trading, let's draw here at what point in today's bounce were bears underwater. Pretty much the only underwater bears are bears that entered right there or bears that entered very late at the end of the day yesterday. Where are the bears that are in green positions after this morning's bounce? And the answer is anybody that's ever gone bearish in the last however many weeks is very comfortably profitable. There is no pressure on them to cover. The high of the bounce today on the daily time frame put us less than 6% away from the high of yesterday. Look at the action on just yesterday's trading. All the bear volume was in the first 3 hours of trading, and pretty much anybody that entered bearish in the first 3 hours of yesterday's trading, only a few of them were in the red today, the ones that entered at the bottom of the initial push yesterday. So the bottom line is there's no pressure on shorts. If you want to see pressure on shorts to cover, you need a daily trend change. And 2 days ago was just the confidence builder for the bears again. Oh, we're going to try for a daily trend change? Okay, if I'm a bear, I'll cover when we change the daily trend because it's been a while since that's happened. We didn't change the daily trend? Great. I'll keep riding my position and I will keep profiting every single day. So until that changes, we're just going to see lower highs and lower lows. So now the question becomes, what's going to stop us from seeing lower highs and lower lows all the time until we go down to zero? Well, eventually we hit a point where fundamental investors or institutions see the market cap reach a point where they feel it's good risk to reward return to establish long-term positions. When that happens, we will see a lot of longs enter long-term positions, and we will see then shorts have to cover. My question today was, who's left to buy? Bulls bought the gap down open, and then bulls bought for an hour of trading. Who's left to buy on that bull break? And if we're looking at institutions establishing long-term positions and sizable positions, then the answer will be institutions. They're going to look to continue buying. They can't do it just in 1 hour because we're talking significant money, but we're not at that point yet. So eventually, whether it's at $18 or $13 on CGC, we will see institutions step in and start buying up the supply of shares. Then that's the scales that I'm talking about, where we have supply of shares outweighing demand. We then will see institutions buy up at what they feel is good value shares. The supply gets limited, the demand increases. Traders like myself are going to be all over this bounce, and I'm going to be looking to make solid swing trade profits on this bounce eventually. Whether that's in 1 month or 7 months, I have no idea, but we will have the institutional investors, we will have the bullish traders come in at the same time, and that sucks up supply, and then demand is there. And the demand will be traders like myself, institutions, and shorts that have to cover. And we will reach a point where it's all buyers, including the shorts that are covering, and the sellers, we reach a point where anybody that's going to go short has already gone short, and anybody that's going to be flushed out of a long-term position has already gotten flushed out. Again, I'm not saying we're there right now, but that's the psychology of when the tilt, the scales tip, and we see the change, and we see the bottom of a fear cycle. So that's what we're keeping an eye out for. Until then, bull breaks are not the time to be buying. And as I pointed out this past week, I took small losses on Cron and ACB buying bull breaks, and that was my slap in the face reminder. What are you doing? We're in a fear market. Why are you buying bull breaks? And I pointed that out when I was live today. The bulls want to be entering on support plays, not on resistance breaks. So entering off of the 5-minute higher lows and putting your stop under each 5-minute higher low has very low risk. Let's say that low is 2027. We fail to break the high of the day. We pull back. I enter at 2032 and put my stop at 2026. I'm risking 6 pennies and hoping we can see a new high of the day. We then hold the 5-minute uptrend. We get that bull break, and then bulls exit some positions. The bears jump back on it. So why are the bears so aggressive? They're greedy. They're getting to a point of greed. And look at the way back up. So remember when times were good and everybody was friends and money was growing on trees? The simpler times in life? Well, CGC on the way up on the hourly time frame from 33 to 56. This is from August 2018 to September 2018. Look at how many bear breaks we had on the hourly time frame that were bought straight into higher highs. Here's an hourly higher low. There's a lower high, lower low, bull break, and a continued run. There's a support level right there. So we had our high, low, lower high, higher low, equilibrium, bear break, straight into a new high. We had more and more. High, low of the pullback, lower high, big bear break, straight into a higher high. So my point is, it is the exact same thing happening, but the opposite. Bulls were buying every single dip. When Bitcoin was in blue sky breakout, I told my friends who didn't know anything about charts, just buy 5-minute oversold. If you buy 5-minute oversold, it continues going up, and it's an easy play. And there would be plenty of support breaks, and as soon as the 5-minute RSI hit oversold, the algos, the bots, and traders like myself would buy that dip, and regardless of the support break, we would see continuation because the overhead resistance was so slim, it was very easy to recover from a bear break. Likewise, for the bears, it's very easy in this current scenario to recover from their breaks or their bounces. This oversold bounce is now right back down at the low for CGC. Look at the 5-minute RSI on CGC over the last couple of weeks. Any single time that 5-minute RSI gets over 70, if you short it, you make money. So again, it's extremely easy for bears. His point about throwing a dart and going bearish and making money is absolutely true. And that tells us that we're reaching a point of euphoria for bears. The bears are going to get in trouble just like the bulls got in trouble. The smart bears won't. They'll be fine. They'll lock in their profit and they'll be done before the climax. But you better believe that we are going to see bears that are 20, 30% in profit. They're going to exit their position at break even or in the red when the climax and turnaround does happen. So it's just a matter of time. Human psychology does not change, and it's the exact opposite of the euphoric cycle. So for my personal plan, patiently waiting, knowing that I have a significant opportunity as a bull approaching sometime in the next however many months, and I'm going to be looking to make significant profit when we do hit our bottom, when we do see the cycle shift from fear. Bitcoin, we saw the weekly trend change, and again, it was a bit more slow and drawn out. It was not a news catalyst that led to the bull break and the change in trend. From the bottom, we dropped 85%. We bounced around for a few months, and then the shift took place. I waited for that weekly signal before I turned bullish. And I did turn bullish on that weekly signal, but I was still timid in the sense that I was not just going to buy and hold. And I definitely didn't make 400% or 300% on the way up, 250%. I made a nice chunk of that, and it's probably going to be the same for me if I'm going to be honest with myself. I'm not going to be able to just buy and hold and sit through and watch the sector for months try and recover. I will probably just get a big piece of the pie, but I'm not going to nail that whole move. But again, I'm just going to be patient until the signal is given. For me, the daily signal on CGC has been waiting for a daily trend change, and it only happened once in the last however many months since 52. And I'm going to be patiently waiting for that to happen again. I'm not going to be buying into weakness. I will play oversold bounces for quick flips, but the sentiment shift will be set either with a news catalyst where we see a big enough move of short covering that we can say, okay, bottom is in for now, or when we see a daily trend change, and really it's going to be a weekly trend change for CGC before I can confidently say, all right, our bottom for this fear cycle is over for now. And that's not going to happen anytime soon. Next time CGC does change the daily trend, we're just looking for a lower high compared to 28.89. And in my opinion, without a significant catalyst, it would likely take, maybe 3 to 7 weeks from finding a bottom, bouncing, setting a weekly lower high, setting a weekly higher low, and then changing the trend. So it's certainly not going to happen quickly unless there's a major catalyst where the whole sector goes into a little short squeeze. I'm not holding my breath for that to happen, but you better believe I'll have my market buy finger ready to go if that does happen. Until then, I will be patiently waiting and salivating at the opportunity that is approaching. So let's now get into regular technical analysis. So CGC ended up closing at the low of the day for the second day in a row. A lot of bear volume. Normally, I would be watching for a volume climax probably on Monday, but with the Canadian holiday, we're not going to have trading on Monday in Canada. We will in the US, so it's likely going to be a bit thinner. Perhaps the bulls can get something going because those order books will be a bit thinner. That's something I'm going to keep an eye on. But I'm interested in CGC, obviously, for a number of reasons. The weekly RSI being oversold, daily RSI getting oversold. Let's talk about the 4-hour RSI. That's why I am most interested. 4-hour RSI is currently 22. Why does that matter? Scroll back historically, and you can see that the entire summer lull here, every single time we see a 4-hour RSI, well, not every single time. There's one time we didn't. But go back and look. Look for yourself. Don't take my word for it. What was the 4-hour RSI where we have bounced all downtrend? 22, 27, 21 point whatever, 22. There was one time where it didn't. There's 23, 24. The one time it didn't was right here in July. That was one of the most extreme flushes that we have seen, and it was potentially the most oversold the 4-hour RSI has ever been, but it dropped down to 18. So again, not much lower than where we stand right now, 17. But the bottom line is I'm interested because the 4-hour RSI historically is at bounce levels. So you better believe I'm going to be looking to play the bounce early next week. I played the bounce today and I made a bit of a mistake. Let's go over that. So gap down for buying scenario. I was being picky, and every single bounce play that I make from here, I'm going to be picky, and I'm not going to have FOMO. In the chat room today, I called it DCOMO, DeComo. don't care of missing out. Because again, we can bounce on these hourly and 4-hour time frames and not change the daily trend, and we're not going to miss this sector running away from us. So I had that mindset heading into today. I wanted the price to drop to the mid-19s. So one thing that threw me off was we held $20 at the open, we bounced 2%, and then we dropped down. If we dropped straight down to 1975 after the bell rang, I probably would have made an initial entry. As soon as you bounce 2% after the bell rings, that cools things off enough that my target then drops for where my initial entry is going to be, because we just used up 2% of a bounce before dropping to lower lows. So I had an order filled out for 1980, and it was just sitting there, and I never pressed enter on it because I was not comfortable due to that 2% bounce first thing. In the end, the bulls did buy the gap down open, and that would have been a great entry, but we ended up hitting the high of the day and then a 5-minute high or low. The trade that I made was based on the 2-minute time frame. And I said to myself, all right, we see the bulls buying the gap down open. If we break 2040, that's enough signal for me that our temporary bottom is likely set and we're going to see an hourly oversold bounce. But because that's not my ideal entry and because I'm entering on a resistance break, you better believe I'm exiting that position real quick. So I bought the break of 240. I exited in the 260s, maybe 4 or 5 minutes later, and that's my day maker. And I was done from there. We ended up with that 5-minute tightening range. And again, better to be buying based off of support than on a resistance break. The only reason I did that was because it was coming after a gap down open and because the hourly RSI was down around 20 or 19 or so. So we ended up fading back down towards the rest of the day. I did play a bounce here at the end of the day, but only for taco gains, just because I was being very cautious. As soon as I saw that there was no sustained bull move, there was no short squeeze kind of action, or at least short covering kind of action, certainly not a squeeze, that led me to just sell for 7 cents profit or whatever. And now that there's no fees, those are certainly even more worthwhile. But back to all cash for a fresh clean slate to watch Monday's action. If we see a bear break of 1926 first thing, I want to see a break of 19, and then I'll be watching to scale in for 4-hour oversold conditions, knowing that history would be on my side for a bounce to be going in the near term if we break 19, because of what that 4-hour RSI would be at that point, and it would be right around 20 or so. Cron closed little weak as well. Did get a little bounce going there. Again, just hourly lower highs every bounce. We had resistance 813 from yesterday. We only broke it by 2 pennies. Lower high at 804. Lower high at 796. Support is 770. There's a lack of support nearby. If I'm going to get aggressive on this oversold bounce, I'm going to diversify, and I will probably play CGC and Cron. Again, Cron's RSI levels definitely have me interested in it, but this bounce in after hours is cooling off the 4-hour RSI a little bit. I'm interested in the daily RSI at this point on Cron. That's down at 22. And again, you go back historically, and this is the lowest it's been. For me, I would rather be seeing a name like CGC, where I have 4 previous examples of times where we bounced from that RSI level, than being at an all-time low RSI level. Because again, there's no history for this, and could we drop down to 17? Yeah, what's saying that we can't? So keeping an eye on that, but once CGC bounces, again, the way the sector always bounces when we're in this kind of scenario is we look for the sector leaders to lead the way on the bounce, and then everybody follows along. ACB, still very weak as well. Daily RSI more beat up than CGC. Again, look back historically where these RSI levels are and what we've seen in the recent past. I can look at ACB's 4-hour chart and say, yeah, well, just in the past week or two, we've seen lower RSI. So that would keep me a bit more cautious there. Anything under 428 is just a lower high, so we can bounce 10% and just form daily lower highs. APHA holding up a bit better just because we had a daily inside bar. It also got more extreme to the downside yesterday. Hourly time frame, we have the low of yesterday, high of the bounce. We'll call the low of the day a higher low. Resistance for me is 476 and 488. Support is down at 461 and 444. If the inside bar breaks bullish next week, anything under 543 is just a lower high. We can go 15% and still be seeing a daily lower high on APHA. TLRY low was 2059. We held that today, but certainly no meaningful bounce. Rejecting from the hourly exponential resistance, and we would have to hold 2054 and break 2151 for any kind of bounce, and then we would just look for a daily lower high between, or I should say before 24.96. So again, DeComo, I don't care if the hourly bounce and a 4-hour oversold bounce go without me, because we're just looking for daily lower highs for everybody. VFF, bear flag on the daily is entirely possible. We had the gap down open on the dilution news. We filled the gap back up at 776, and now it's looking like a bear flag. So if we were to break 716 on Monday, odds of a bear flag increase, then it's just 7 and 684 as the next support levels. T-God, also a potential bear flag on the daily. Anything on the daily under 205, 206 is just a lower high. Short-term support is 114. If 114 breaks, the odds of a daily inside bar increase significantly. Hexo, still in free fall. So RSI levels out the window to a certain degree as it's getting crushed. We have no nearby support levels. Actually, we do have one, 244. After 244, we're looking down at 2 psychological. And will there be a nice bounce on Hexo next week? Absolutely. Timing it's going to be a bit more tricky, and I wouldn't be surprised if CGC and Hexo bounce at the same time. There's been scenarios where we see significant weakness in an individual name, like ACB when it had its earnings reaction and weakness, and it was ACB bottoming out that dictated a bounce for the sector. So I will be watching Hexo early next week and watching to see, is the Hexo bottom going to mark the temporary bottom in the sector? So pretty much CGC and Hexo are going to have the most weight for me in terms of who's going to lead the oversold bounce. Again, just like the last oversold bounce, I ended up with over a week maker on this CGC trade, but I took that profit because you better believe that I knew we were just going to form a daily lower high. So absolutely, we'll be looking to lock in short-term profits as they are there, or at the very least, stop loss at break even and hoping to get more follow through. OGI finally got a bounce going, held the low of yesterday, broke the high of yesterday, solid big bull volume. So a really nice move today, definitely stood out as a lead bull, up 20% from the low of the day. Hourly time frame, higher low is 302, and that bull break of 311 led to some real nice quick gains with that hourly trend change being confirmed. So resistance will be 333. Anything on the daily chart under 369 is just a lower high, some temporary relief, and the biggest plus for the bulls is that volume. To see that kind of volume on a green, almost a green Maribozu day, bottom line is it was mostly buying today, and that's a lot of volume for a lot of buying going on. But still just looking for a daily lower high. VGW, same as CGC with our low, high, higher low, lower high, bear break right back down to 272, and we broke that. Now after 270, 241 is the next level, and anything on the daily under 325 is just a lower high. And Labs is holding on a bit better, low, high, higher low, lower high. Bulls must hold 362 and break 412 to stay alive on this bounce attempt, and it's one of the few names that is still alive on this bounce attempt, but bulls still have proving to do, and the daily exponential resistance has rejected the price 4 times in the last 6 trading days. So bottom line, I will be looking for an oversold bounce. I was interested today because at the end of the day, I looked at CGC and I said, okay, 4 hours at historical bounce levels. And then I looked at the 15-minute RSI and it prevented me from getting too aggressive. I said, no, 15-minute RSI isn't as beat up as I want it to be. I want to see 4-hour, hourly, 15-minute, 5-minute as beat up as possible, knowing that in that scenario, I will likely get a short-term bounce at the least in the near term to position myself based around. And that wasn't the case for CGC at the end of the day today. So best case for me, break 19 Monday morning on CGC. I will definitely begin scaling in for a 4-hour oversold bounce and keeping an eye on Hexo and other names as well for their bounces. But again, lock in that profit when you have it, bulls. Unless we see huge bull volume that indicates something else is up, we're going to treat it as the same old as far as daily bounces for lower highs to be set, keeping the bears in control. So I appreciate you watching. Hope you have a good rest of your weekend. We'll do the USMJ video some point, probably tomorrow, and we'll see you soon. Make sure you go out there in the world and do good things.